Hello there. Welcome to my other hat. So I am the silent partner, and I'm full silent partner in MCR Accounting, a business that I own and operate with my life partner and wife, who is also my full business partner at Ryer Process Operations. So now that we have this studio operation here, we're going to see if we can't take some of the very nice community service work that MCR Accounting's been doing in the field of financial literacy and put it into videos and see if we can't get some of that very basic information out to a bigger audience. Not that there's anything wrong with addressing the local audience, but I find some of this content to be quite powerful over the last few years, and I think it'll be a good service for people. So I'm going to be posting it here in my LinkedIn feed. I'll post it directly in my timeline. I'm posting my RPOS content over at the Stowe Community of Practice page. Please do join us over there if you have an interest in shutdowns and turnarounds. If I will be sorting these videos on my YouTube page, if you would subscribe to me there, so that these videos will fall neatly into the MCR Accounting watch list. So with that introduction, I'm going to begin with the videos proper. Hello there, this is the first episode of the MCR Accounting Financial Literacy Series. We're going to be dealing with very simple financial questions. Simple if you're speaking as a bookkeeper, accountant, tax specialist type thing. So not necessarily simple in terms of how they affect our clients or how they concern people. So today, with tax time coming up, I thought I'd start with the question of tax reviews. First point, a tax review is not a tax audit. Okay? Now, how you handle your tax review could very well lead to a tax audit if you're not careful, but it's nothing for you to be panicking about. And we're going to help you understand that piece. Okay? So there's three basic types of tax reviews. The first one is a pre-assessment review, and that quite simply just means that they're going to do this review in the background prior to even sending you your notice of assessment. They may or may not contact you during that time. You may or may not realize that this tax review has taken place. Funny thing, all the tax reviews that take place that you don't become aware of don't scare you near as much as the ones that do. After you have got your notice of assessment, many of us feel that the tax year must be over for us for the year. Don't think that. It isn't. There can be a processing notice of review where, again, basically they're looking for the same things. They're just checking the data that you provided and verifying it, and they may have questions for you along the way. Finally, later in the year, September till all the way through till March of the next year, there's something called matching reviews taking place. And these are basically what the word says. Your CRA has your inputs. They have the inputs from your employers and other people that have inputs to put into your tax file. Matching reviews are quite simply that. Does the information you provide match the information other people provided? So one that can catch you here is if you're divorced, it's a really good idea at this point to make sure that what you're telling the CRA about child care arrangements is the same thing that your ex is telling. Because if it's not going to go unnoticed. Make sure that the information on your tax return matches the tax slips from your employer, your bank, and your investment firms. So understand all of these people have legal reporting requirements too. So if you might even be only $1.60 that your bank is reporting that you made an interest. Make sure you include it when you do your taxes. or it can be the kind of thing that triggers a review. There's reasons for review. The information on your tax slips does not, we just kind of covered that, does not match what other third parties are contributing. Doesn't match the information from your employer, for instance. Obviously, the CRA has no options there but to check into that. The types of deductions and credits you're claiming. So, maybe this year, for the first time in your entire employed life, you're going to decide to donate $50,000 to the federal Liberal Party for the upcoming election campaign. They would want to know, about this change in behavior. That's a fairly substantial tax credit, and it's pretty reasonable that they might ask about that. So you're changing your behavior. It doesn't mean you're doing anything wrong. It just means that, you've upset the apple cart a little bit. There's unusual changes in your review. So maybe that can be something like, so maybe you formerly always lived in the Okanagan. And now you moved up here to the Alaska Highway where I live. And now you have Northern residency credits in your tax filing. It might come as a shocker, but there have been one or two people in the history of the Northern residency deduction that have tried to, claim it when it wasn't theirs. So that's a primary trigger. Actually, Northern residency deduction in general can be a trigger for a review. Keep all your tax records for 6 years. Again, you can be reviewed at any time. You can be reviewed even after you've been reviewed. So make it easy on yourself. Get a file. Keep your records. They don't take up that much room. This is just basic financial literacy stuff. The CRA will try to complete their review based on the information it has on file. They're not going to just forget about it. The review isn't going to go away. And if you're not going to participate, they'll do it themselves, right? How do you think that's going to go? So there's 5 tips to helping your review go smoothly. The first one, which I'm not including in here, so let's say there's 5 plus this one. The first one is do not ignore or mouth off to the CRA. First tip. Here's what I'm calling the first tip. Send your response within the specific time frame. So actually, I could do an addendum to this one too. The first step in being able to meet the time frame is to open the mail. CRA prefers to communicate with you through the mail. And when they do have a question, they communicate you through the mail. The mail is fairly easily tracked, so repeatedly saying it never arrived isn't going to fly for very long, right? And inside that envelope, you're going to find a time frame. It's usually 30 days. So if we were receiving at MCR Accounting, we were receiving your bookkeeping work on a monthly basis, one of our people would likely find that an open envelope and they would get back to you, and maybe you'd still have 5 or 6 days to complete whatever it was. But best laid plans, mice and men, all that kind of stuff, quite likely it got forgotten. Now it's a month before tax time, and we're finding half a dozen of these different CRA letters in your file. There's not much that can be done at that point in time because your 30 days have gone by. Include any additional information or supporting documents with your response. They've almost always asked you a question. Don't be short with your answers. Be complete. Give the supporting documentation, if there is such a thing. Sometimes they've asked for specific documentation and you don't have it for whatever reason. Don't ignore that either. They have a record of everything they asked for. They're going to review whether they got everything they asked for. So if you are not sending it to them, provide the explanation up front. If you need to, phone them, right? There's a phone number right there for you. So that's the way it works. CRA is communicating to you by mail, but you are allowed to phone back to them, right? They just don't communicate to you by text message demanding that you meet them at midnight down behind the corner store with a ton of iPhone cards in your pocket. They don't do that. Make notes of your communications with the CRA always. I mean, these are big organizations, they're bureaucratic organizations. And quite frankly, this is just good life advice. I used to give, when I was chief shop of a union, I used to give the same advice to my membership is if you're going to get yourself in a bind that's going to require my help down the road, make diary type notes. Handwritten, dated diary notes turn out to be quite powerful tools if you end up in a defend yourself situation. The same thing is true with the CRA. Always include your ID number every step along the way, and always record the person you're talking to and their agent number every step along the way. Always include the reference number for your own case, right? Don't play a guessing game, right? How do you feel when somebody that's asking you for understanding and help, makes you try to figure out what they're talking about, right? Key points here for this one brief session. The CRA may review your tax returns at any time, and they will. There is no, call it safe line that you're crossing. When you get letters from the CRA, respond, take action. And I want you to respond two ways. First off, open the envelope. Read what it says. And this is often true, and it doesn't mean anything, sometimes the language government bureaucracies use can be a bit confusing. If the language is confusing, get a hold of your tax specialist. Certainly at MCR Accounting, they'll be more than happy to help you understand what it is the CRA is asking. Then respond. Meet the ask within the time limits they've given you, or get a hold of them and explain why you can't meet that ask. Anything is better than ignoring it. Ignoring it will never work on your behalf. Thank you so much for your time, and we will continue this series of financial literacy videos in the future weeks. Have a very nice day.